Stocks and cryptocurrency are two popular investment vehicles. But is there one better than the other one? Hi, my name is Gio. In today's episode, we're gonna talk about stocks versus cryptocurrency. Let's get started. When you invest in stocks, you are buying shares of public traded companies. The stock you invest in give you a fractional ownership of the companies, meaning a tangible asset backs your investment. Unlike crypto, whose fluctuating value depends on public opinion, the value of stock is determined by the company's performance, outlook, valuation, and cash flow. Why stock rise and fall? A stock price moves as investors estimate the future success of the company. While investors may become overly optimistic about the stocks in the short term, the stock price depends on the company's ability to grow its profit over the long term. A stock rise in the long term due to the success of the underlying company. For a stock to be a successful investment, the company must perform well over time. Cryptocurrency, on the other hand, is backed by no hard asset with few exceptions like stablecoin, and that's the case for most popular coins such as Bitcoin and Ethereum. A cryptocurrency may allow you to perform certain functions such as sending money to another person or using a smart contract that automatically executes after specific conditions are met. The original goal for crypto was to one day become a currency that's commonly accepted as cash and credit. Unexpectedly, along the way, it has become popular to buy crypto and trade it like an asset that could hold value over time. Many people now associate crypto with stocks, even if they are completely different. Why cryptocurrency rise and fall? Because cryptocurrency is not backed by assets or cash flow. The only thing moving crypto price is speculation driven by emotions. As emotions change, the price shifts, sometimes drastically. So cryptocurrency is driven only by the hope that someone will buy it for more in the future. For a cryptocurrency to be a successful investment, you must get someone to buy it from you for more than you paid for it. The market must be more optimistic about it than you are. Both cryptocurrencies and stocks have their good and bad days. However, stocks have a long history that make it easier for investors to predict the future. Stocks face different kind of risk, including businesses and financial, market volatility, and government regulations. However, cryptocurrency, on the other hand, are a decentralized structure. They don't have a government or a group of people controlling it. Cryptocurrency has taken the world by storm, especially the last 2 or 3 years. According to CoinMarketCapital, in 2021, the total value of all these digital currencies has grown to more than $2 trillion. Of these, Bitcoin is the most popular, worth more than $1 trillion itself. To better understand which investment is better for you, let's look at it from different point of views. Let's start with ownership. To own stocks, you typically need a brokerage account to handle the transaction. That account is verified by information like your address, social security number, signature, and more. This offers some protection in the event of identity or fraud. Stocks exchange have existed in some form or another for more than 2 centuries, most famously on Wall Street in New York City. If you want to start trading with cryptocurrency, the process is much quicker. Simply sign up for a cryptocurrency exchange platform, verify your account, and start trading. On many exchanges, you can deposit funds to wire transfer or even credit card. Cryptocurrency exchanges are fairly new. The largest one, Binance, launched in 2017, Coinbase, another major player, was created in 2012, Crypto.com was founded in 2016. If you consider to open an account on any exchange, you can use my affiliate link in the description below and we can both earn free Bitcoin. Binance had a daily trading volume just over 50 billion in May 2021. At the same time, the Nasdaq, which is just one small part of the global stock market, at a trading value that was 5 times that amount, and the Nasdaq is only 14.5% of the total stock market. Cryptocurrency offers more anonymity. You keep your Bitcoin in a wallet, which can be fully virtual or even on a USB drive. While anonymity has its advantages, it also has its risks, like losing currency to a hacker or forgetting your password and access to the account. Setting up your account is free and you can get started with a very low investment. Looking at the liquidity generally refers to how easily or quickly a security can be bought or sold in a secondary market. In other words, liquidity describes the degree to which An asset can be quickly bought or sold in the market at a price reflecting its intrinsic value. Cash is considered the most liquid asset because it can be quickly and easily converted into other assets. Stocks are considered liquid since there are so many active traders in the stock market. With cryptocurrency, on the other hand, liquidity is different from one form of crypto to another. Bitcoin is more liquid than other coins or tokens simply because it has a higher trading volume. That means there are more buyers and sellers who want to trade if you want to get in or out of that particular cryptocurrency. Both stocks and cryptocurrency investors can fall victim to slippage, which involves losses when you have to sell a large amount of an asset during a period of low liquidity. However, the risk is higher for crypto owners because of the lower levels of liquidity in the crypto market. Looking at the volatility, there is volatility and risk involved in buying both crypto and stocks. Both assets can go up or down in value, and it's nearly impossible to time the market to know exactly the best time to buy or sell. A lower volatility means that the market and investment is more stable, but this also means that you have to wait longer for a financial reward. This is mostly the case with the stock exchange. The large trade volume makes the stock market more stable and less exposed to the movement of a big trader. But the connection with government and corporation everywhere in the world also means that the stock exchange is frequently impacted by geopolitical events. Cryptocurrency market have a much higher volatility. Because the market is pretty new, is making the cryptocurrency marketplace vulnerable to the trade movement of the whales. A whale is a trader who owns a large amount of cryptocurrency, and so the whole market can be vulnerable to the trade decision to those that own a large portion of the market. For example, when news broke in January 2021 that Elon Musk invested $1.5 billion in Bitcoin with his company Tesla, the price of Bitcoin jumped 17% to a new record high within hours. A jump like this is rarely seen in the stock market but can happen quite often in the crypto space. The higher volatility of the cryptocurrency market exposes more risk but also holds the potential to make more profits much quicker. In terms of trading costs, every time you buy or sell stocks, you have to pay transaction fees. That reflects into your return. Even if you buy low fees, no load index funds, you have to pay fees that go to a manager who buys and sells the stocks in the fund. The cost in other funds and for trading through a brokerage account will be higher. Trading on the cryptocurrency exchange includes fewer costs. Transaction costs on the blockchain are much lower because they only include mining fees. Exchanges themselves do have fees for trading and transaction, which can vary depending on the platform you use. Looking at the regulation, like all securities, stocks are some of the most heavily regulated assets that you can trade. The Security and Exchange Commission monitors public shares closely and does the same for the market on which those shares are traded. Almost all stocks trading in the United States, for example, are conducted on the New York Stock Exchange and the Nasdaq. Any given stock will only be listed on one exchange at a time. While you can trade shares privately, this is rare and typically only with unlisted and penny stocks. Cryptocurrency do not have yet any kind of centralized exchange system. Instead, a network of hundreds of independent companies run their own small exchange where individuals trade cryptocurrency between themselves. Unlike the formalized stock exchange system, in which shares are traded through a third party known as a clearinghouse, most, if not all, the cryptocurrency is traded directly between the buyer and seller. Take into consideration, it is possible that this may change as this market grows so fast. Looking at the trading hours, most traditional exchanges have trading sessions, meaning that you can only do transactions in certain time period, for example 9 a.m. to 6 p.m., with no trading during weekends and official holidays. Cryptocurrency, on the other hand, are available 24/7 regardless on weekends or holidays. This means that the market can instantly react to any event and you can make profits via news if you are quick enough. But on the other hand, this also means that you often want to be online as much as possible to minimize the potential of missing opportunities or important news. When comparing cryptocurrency versus the stock market, it is important to remember that they are very different assets. They play a potential different roles within a portfolio. portfolio. The right mix for you depends on your personal risk tolerance, financial goal, and current financial picture. And when you end up, reach out to a financial planner to discuss your best options for building a personalized wealth building strategy. Many experts advise allocating the majority of your portfolio to lower risk, stable assets such as mutual fund and exchange traded funds. S&P 500 index funds are a popular choice. You may choose to devote a small segment of your portfolio to speculative capital, which goes into high risk, high reward assets like crypto. How much of your investment are speculative is ultimately up to you, and you should only invest money you don't need anytime soon in this asset. Thank you so much for watching my video, and if you like the content, please consider to like and subscribe to my channel, and don't forget to check out the links down below. See you next time.